I think when we're talking about the impact of a Phase 1 agreement, what has the trade war meant for the Chinese economy? What's the Phase 1 agreement going to do to the Chinese economy? I want to just address that. I think to begin with, we have to understand why China's been slowing down over the last several years. How important are the economic frictions versus some of the other factors, which I'll just talk briefly about. I think one, of course, is China's external surplus has been declining. The growth in the previous decade was supercharged as China's global trade surplus skyrocketed. And in more recent years, the surplus has been coming down, and that's been a drag on China's economic growth. It's a major structural change, which I think, quite frankly, is a positive development. The second reason China's been slowing down is a moderation of credit growth. China has had a deleveraging campaign. They haven't actually reduced credit to GDP, but instead of accelerating dramatically, it's now leveling off. And as you can see in the diagram, we have credit growth now in the neighborhood of 10, 11% instead of much higher numbers, 14, 15% a couple of years ago, and much higher if you go back to the time of the global financial crisis. So if you have less credit growth, you have a slowdown. And the next factor is related, and that is credit has shifted dramatically in favor of state companies. Private companies used to get quite a bit of support from the banking system. That has changed dramatically. China quit publishing this data. You can see in the most recent year, more than 4/5 of all the credit was going to state companies. China quit publishing this data more recently. But I'm looking now at what's the growth of the assets of state non-financial companies. And for example, if you look since 2012, since Xi Jinping came into power, the assets of state non-financial companies are growing at roughly twice the pace of GDP. So they seem to still have very, very robust access to credit. And of course, that's negative for China's economic growth. As Jinqiao already showed us, state companies have had relatively low returns, and they've been systematically declining over recent years. Now, the fourth factor is the trade friction, and my view is that the trade friction has not had a very large effect on China's economic growth so far. China's exports this year are roughly flat, but global exports are down. So we're in an environment where global trade growth is very weak, and China's done quite well. So it's managed to offset a huge loss in exports to the United States, roughly 20%, which is its largest market, by selling more in the rest of the world. So the idea that China is slowing down because of trade frictions, there obviously is something to it, but it's not quite as simple as it may seem at first glance. Other people talk about how the global value chains are moving out of China, but foreign direct investment into China is growing at about 3%, which is roughly the same average growth it has been for the last 5 years. And this is in the face of what is close to a collapse of global FDI flows, according to the OECD. I will defer to Catherine on this, but they published a report not so long ago saying that FDI in the first half of this year was roughly 20% compared to the second half of 2018. So China's holding its own in terms of trade, and it's increasing its share of FDI inflows, which support its domestic economy. So my view is the slowdown is mostly due to the moderation of credit growth, the misallocation of credit, and the moderation of China's external surplus. So the conclusion I draw, which will be my last remark, is that the Phase 1 agreement is not likely to lead to a reacceleration of China's growth or an improvement in China's growth, because I think all the evidence is credit will continue to be misallocated as it has been, which is a drag on growth, and credit growth is likely to continue to moderate. The Chinese government seems very committed to not going back to substantial growth of credit, which creates a substantial financial risk. So my view would be Phase 1 agreement, as other people have said, is an important development, but I don't anticipate that it's going to be a big positive factor in China's economic growth as we go through 2020.